Welcome back to the Wall Street Podcast. Today we're diving into a key piece of research, Goldman Sachs Asia's 2Q25 Robo Automation Landscape Analyzer came out July 31st, 2025. It pulls together MIR's sales data, company disclosures, basically the competitive view for China's industrial robots and automation. So what's the headline takeaway here?
Well, the big picture is a bit mixed, actually. The overall industrial automation market, the IA market, it softened. Saw about a 2% year-over-year decline in Q2, and projections suggest that soft trend might continue for the full year.
Okay, a decline overall.
Right. But contrast that with industrial robots, IR. Unit sales hit 86,000. That's strong growth, 20% year-over-year, 12% quarter-over-quarter.
1%, quite a difference.
Exactly. And significantly, domestic brands really pushed forward. They captured 54% of that total IR market share. That's up 4 percentage points, both from last quarter and last year. So yeah, clearly outpacing overseas brands in sales volume.
That 20% IR growth is really striking against the softer IA market. Let's unpack that. Where specifically are we seeing the most action within the different robot types?
Yeah, good question. The growth isn't uniform. Cobots, collaborative robots, they showed the strongest year-over-year growth. We're talking 52%.
52% for Cobots. Wow.
Indeed. Then you have large six-axis robots, also strong at 21% growth,
Right.
and small six-axis robots grew 18%.
Okay.
Scare robots saw decent growth, 10% year-over-year.
Yeah.
Delta robots were a bit more modest, just 4% increase.
Fascinating breakdown. So with Cobots and the six-axis types leading, which companies are, really capitalizing? Who's gaining share in this dynamic?
Well, ESTUN is a name that stands out. They held on to their #1 spot in the overall industrial robot market. They have about 11% market share, and that was really fueled by 44% year-over-year sales volume growth, just solid across the board.
44% growth for the leader.
Right.
Okay. What about others?
Inovance is another key player. They rank 4th overall, about 7% share. Now, their overall year-over-year sales were flat.
Flat, despite the market growth.
Right, but that flat number hides some really dramatic shifts internally. Their large six-axis robot sales exploded up 553% year-over-year.
553%.
Yes, and small six-axis robots up 105%. Huge gains there. But these were offset by declines in their Stiara robot segment.
I see. So a strategic shift, perhaps.
Likely, it points to maybe focusing resources. And you also saw other domestic players like ESTUN and Patient showing really substantial volume increases, particularly in that small six-axis segment.
It's clearly not just about the assembled robots. The components behind them must be seeing shifts, too. How's that landscape looking?
Definitely. Inovance, again, is very strong here. They kept their top rank in servo, that's 34% share, and they actually increased their share in low-voltage inverters to 25%.
Leaders in core components, then.
Absolutely. And notably, Inovance cracked the top 5 for large PLCs.
PLCs, the programmable logic controllers, the automation brains.
Exactly. They secured the 4th spot there. And importantly, they're the only domestic player in that top 5 for large PLCs. Plus, they improved their rank in small PLCs to 3rd.
So strong component play, especially moving up in PLCs. Now let's connect this back to demand. Which end markets are driving this robot growth and which are lagging?
We saw double-digit year-over-year growth in robot sales across quite a few sectors, like electronics, metal products, auto parts, lithium batteries.
Key growth areas.
Yes, and also auto itself, auto electronics, chemical products, and semiconductors. A broad base, really.
And the laggard.
The one significant underperformer continues to be solar. It saw a 24% year-over-year decline in robot sales.
Solar's still struggling there.
Yeah.
Okay, let's step back for some analysis. We have this clear divergence, soft overall IA market, yet booming IR sales, particularly domestic. What's this telling us about China's manufacturing upgrade cycle right now?
I think it signifies a highly selective investment focus. General industrial capex might be constrained, yes, but manufacturers are clearly prioritizing robotics. It's about efficiency gains, reducing labor dependency, gaining that competitive edge. It's targeted.
So strategic automation over broad spending.
Precisely. And the strength of domestic robot brands points to this push for, well, technological upgrading and strengthening local supply chains, even when the broader economy feels softer. It's a strategic imperative.
Okay, let's look at ESTUN and Inovance again. Two domestic leaders, quite different performance profiles, as you mentioned. What strategies are driving their market share movements, and what do their segment strengths and weaknesses tell us?
Right, two interesting cases. ESTUN's consistent top rank and that strong, broad sales growth suggest a really effective, wide-reaching market penetration strategy. They're hitting multiple segments well.
Just solid execution.
It seems like it. Inovance, though, it's more nuanced. Their leadership in core components like servo and LV inverters gives them a really stable base, a foundation. And breaking into large PLCs, as we noted, shows their strengths in higher value, more complex components.
But the Scaro decline.
Exactly. That decline, even with the huge six-axis gains, highlights just how intense the competition is in specific segments. It likely points to Inovance making strategic choices, allocating resources towards, say, higher growth six-axis robots, or perhaps segments where they feel their position is more defensible. It's dynamic.
Understood. So bringing this all together for investors evaluating the space in China, considering these dynamics and market demand, component leadership, the domestic push,
Yeah.
what are the actionable insights here?
Well, the sustained high growth and automation adoption in those advanced manufacturing sectors, electronics, auto parts, batteries, semis, it signals where the resilient demand is. These are strategic pockets,
So focus on companies exposed there.
right? Focus on companies with strong exposure to those drivers.
Yeah.
And critically, those demonstrating leadership in the core components, someone like Inovance providing that underlying tech, is key.
Okay.
But you also have to be granular. The continued weakness in solar, for instance, is a clear reminder that you need sector-specific analysis. You can't paint the entire industrial automation space with one brush. And, it raises a broader question. Can this concentrated strength in robotics eventually pull up the rest of the IA market? Or will this divergence continue? That's something to watch.
Indeed. So wrapping this up, what does this all mean for you, our listeners, looking ahead?
I think the key takeaway is that China's industrial automation and robot market shows us clear strategic drive for efficiency and, importantly, localized technology. Understanding these dynamics, from the big macro trends right down to the specific segment performance, is really crucial for figuring out where industrial investment is heading.
And these shifts really underscore the rising importance of domestic players and how automation is being targeted very specifically, even when overall capital spending might be tight. Fascinating developments.